Hello there, let's make today's update for the video portfolio. I believe the sound is very low. There's a problem with my microphone. I'm gonna have to buy another today. But I hope you can hear this. Well, the video portfolio is up 1.4% now, with especially DAC here rising 6.4%, and I'm winning 9% on that stock, about 12% on INSW, and 1.4% on Eternal. And well, here's our chart since inception. We had this very nice bull run here, but since then I've been trading more or less sideways to down, and coming back up today. And the portfolio is gaining since inception 9.75%. Inception was about 30 trading days ago, so very nice, at least so far. I already took 2 profits and 2 losses, 2 small losses. Okay, today I'm gonna buy a new one, PFSW, which appears to be the most attractive stock I've ever studied, because it is a true turnaround play. Well, I've explained it more or less in this stocks thread, but basically they merged with eCost, and everybody thought, and I was included in that group, that eCost would see their revenue shrink, and the website would be shut down, and perhaps even PFS Web would file for bankruptcy, because it is trading at less than 1/10 of its annual revenues. The market cap is roughly $44 million, and the company sold 400 and let me check here. Just a sec. It sold $423 million in 2006, and just 44 million in revenues. That's because everybody thought eCost would drag the company to the bankruptcy. It was losing a bit of money here. Normalized income minus 9 million in 2006, even with these very high revenues, and revenues were growing very fast. Look here. But the company announced today, it gave second quarter guidance for eCost, and it said eCost will sell $26 million, and that's roughly 20% above Q1 numbers. So very strong sequential growth, and it said that will improve the company's margins. And if PFSW can post a profit, this stock will skyrocket, because it is trading at just 10% of its annual revenues, so incredibly cheap here. It was priced for bankruptcy, but it seems it will grow of that status and turn profitable, so there's enormous potential here. I'm going to add this one to the video portfolio. At today's closing price, PFSW, the stock is up today quite strongly. It is up 10.3%, but I expect a lot more than this. My valuation model, let me see if I have it here. Oh yes, I have it here. Well, it tells me the stock may return 114% a year for the next 3 years, so this is really outstanding. This is the best I've ever seen. And my estimates aren't all that aggressive. You can see here I expect just 10% revenue CAGR and 3% final net profit margin estimate, and the stock trading at the industry average of 26.95 times earnings, and this gives me a final estimated share price of $9.49, and the stock today is trading at 95 cents. The optimal selling price would be $6.08. Well, I've explained this on other analysis, so really very attractive, a complete surprise to me, priced for bankruptcy and growing out of there, growing 20% a quarter, so really terrific news for PFSW. I'm gonna add it today at today's close to the video portfolio. Now let's make a brief update on the current 3 holdings. INSW. Well, we had reports that insiders converted options to buy shares at $7.17, and today the stock is trading at 7.5. So insiders know that second quarter will be also very positive, as the first quarter was, and another insider has been buying shares at 6.8. So there's a very limited downside risk here, and there's a chance we may have another bump like this. Well, perhaps not so big, but definitely the stock is bullish and fundamentals are very attractive. I'll keep holding this one. And EDAC is surprising everybody today because it is up 6.5% without any news on volume above average. Perhaps it is Boeing lifting old boats in the aerospace and defense industry. And so nice price action. I'm winning about 10% here, and I'll keep holding EDAC. And Eternal, well, this stock is trading at, according to my calculus, you can check that out on the Eternal thread. It's trading at 4.5 times 2007 estimated earnings per share, trading below cash. So probably the most undervalued stock out there in the market. I'm not willing to let go this one here. I expect it to at least double over the next 6 months. Because fundamentals are way too attractive. Revenue growth in Q1 2007 was 78%. Net income growth was 125%, and the stock trades at 4 times, about 4.5 times earnings. That's really incredible. I believe this is because they had a big warning about the convertibility of the Chinese renminbi to US dollars. Over at their 10Q files, but not anymore. And the company announced a share buyback program of 5% of its outstanding shares in the US. So that's a nice catalyst to make it run above $1. I'm very positive of this, and I'm not going to let go of Eternal. So this was today's update. Thank you for listening. I hope you could listen very low volume, but I see you tomorrow. Thank you. Bye.